Today we'll be talking about the module 2, and we'll be explaining stuff like currency risk and many other things. Let's go. So before we start, understand that good finance is doing something that is very different than what you currently see in the decentralized space. Before now, you have concepts of you coming to borrow, then you have to over collateralize. So let's say, for example, you have $1,000 worth of ether, and then they can issue you maybe $500 worth of DAI that you can use. So the question is so people basically trying to borrow are people who already have an asset and do not wish to sell it, but wish to obtain credit, like minimal to do something else, and that they can actually pay back and all that. But what Good Finance is doing is we're talking about reward businesses, right? Businesses that need loan but have maybe some assets like they can present as collateral that are not yet obtainable in the blockchain space, because right now you can only borrow crypto against crypto if you ask collateral. So what are some of the risks we are talking about? We're talking about the macro kind of risk. So the macro kind of risk is a political risk. Number one, that is the first thing you should understand. The number two is unlike the micro risk that affects, let's say, a section of business or industry in the country. The macro risk is a risk that is at the political level, but it affects every industry. So as long as it's a business, it's affected, right? So we'll be saying some of the potential causes of micro risk. One of them has to do with political. So anything could actually happen. Probably a government was installed. That's probably there are some countries like maybe third world countries that are still under the heavy influence of let's say colonial masters or some other external powers. And if you install leaders that are against their way, it's another thing that could actually upset this stuff. Or maybe political things could actually change, even if this stuff are not controlled by external forces. Another thing could be macroeconomic causes, which we'll talk about later. Examples could be monetary policies, things like political or civil unrest, and then finance and the regulation regime, tax regime. Now, one of the things you have to understand is that a company have to sit down and say, okay, what is the current macro risk that we are potentially trying to face, and then try to foresee things that could actually happen if they are still going to ahead with some of the stuff, and then they can buy insurance against this kind of risk. There are companies that help with insurance. So the next thing has to do with regulatory kind of risk. So these are the risks that are the existing kind of laws and regulations that can actually affect a business, that can actually affect the market, that can actually affect the sector and all that kind of stuff. So it's very, very clear that for investors to understand the current, number one, the current level of risk. So we will differentiate two things: regulatory risk and then compliance risk. Now, if you talk about regulatory risk, for example, regulatory risk is what may come up, right? For compliance has to do with what we already know. So regulatory can be something that can come up in the future, right? And then compliance is something that we already know and we're trying to comply. An example could be when this kind of regulations come on board, it could increase the cost of doing business. So let's take, for example, there's a certain kind of regulation that just came and said every single person in the country that is working is supposed to be paid a certain minimum wage, right? Like you do in the US, they say this is the minimum wage, let's say $10, and then a regulation just comes and then it says you have to pay the minimum wage is $12. That's going to affect the cost of doing business. The next thing again is going to change the competitive landscape. There are some stops that can actually come in and they put caps. So an example could be let's say banks or a financial clearing, as where they say maybe you're operating a fintech company and then they say the minimum amount of money you're supposed to have in your bank account is X amount, and now they are saying they have increased it to 50%, meaning such kind of thing can change the competitive landscape. Another thing again is it can also cause the death of an industry. I remember there was a time where there was a certain law that was passed in Lagos, and it meant that there was a death of the industry, right? This motorcycle industry, they call them, I think, is it go-kart or something like that. When the law was passed, and they already invested so much money, and it was a very, very bad one. So it could cause a lot of an industry regulatory risk. Then the next thing is currency risk. So this refers to the kind of losses that the company may incur as a result of financial transactions. There are a host of them. One of them has to do with transaction risk. So transaction risk actually arises from if you want to actually maybe sell something, right? You are in Nigeria, for example, and you want to sell to a company in, let's say, in the US. Now that company in the US will pay because you will be charging them in their own currency, right? Charging them in their own currency. So there is a risk if the currency, the currency of your country, let's say, goes higher, it tends to maybe favor you and the rest of them. Then the next thing has to do with translation risk. So translation risk may come from, let's take for example, we have Netflix, and then we have Netflix. Netflix has offices around the world, like in Nigeria, and they have an office. Like when I came to Saudi Arabia and I subscribed for Netflix, the amount that I pay in Nigeria or what is different from the amount that I pay in Saudi, right? So if you are trying to, and then you get the same services, right? 247 streaming and the rest of them. So translation risk could occur from when the company is trying to maybe change the amount, even if it's the same. If you're trying to, okay, you've obtained naira from citizens in Nigeria here, you're trying to, because you cannot send naira to the company's account, right? You're trying to translate this amount to to the foreign exchange, and the company is this side. Those losses, as you can see, the currencies fluctuate. Those are the losses that can actually a company may actually incur. Then the next thing that the company might actually incur is okay. That will be all for now. Thank you very much for listening to my presentation.